Hello and welcome to this special segment called as MC Pro Select Stock of the Day. I'm your host, Nikki Mirchandani, and in this segment, like always, we bring to you fundamentally strong investment stock ideas. Today's pick is Krsnaa Diagnostics. Let's get to know more about the company, which specializes in the diagnostic services through public-private partnership (PPP) contracts, delivering them at a highly competitive rates. Tests are priced significantly lower, ranging from 40 to 70% below standard market rates, making healthcare more affordable. Radiology services contribute significantly, comprising of 50 to 55% of the company's overall revenue. The approach underscores the company's commitment to accessible and cost-effective diagnostic put together. Now, why talk about the stock right now? A couple of reasons. Let's bring up the first factor for you. The projects ramp up. Recent projects undertaken by the company in the last few quarters are currently in the ramp-up phase. Moreover, there are several large-scale projects currently under implementation. The front-loading of expenses associated with these centers is expected to impact Q3 FY24 margins. However, improvements are anticipated from Q4 FY24 onwards. The positive contributions from newly executed projects in Assam and Odisha are expected to play in a significant role in the margin improvement of the company. Now, the company is looking to scale up B2C presence. That's the second factor working in the favor of the company, which has recently ventured into business to consumer B2C operations, utilizing both franchisees and home collection as distribution channels. With a strategic focus on expanding its direct to consumer presence, the management aims for approximately 10% revenue contribution from the B2C segment, showcasing a commitment to diversify revenue streams and tap into consumer markets directly. Let's talk about the strong outlook there. Well, the management at least has set a target guiding for approximately 30% of revenue growth for the financial year FY24-25, accompanied by an EBITDA margin ranging anywhere between 26 to 28%. The initiation of operations under the Rajasthan contract is anticipated to potentially fuel an even higher year-on-year growth in FY25 and 26, supported by a solid tender pipeline and the scaling of projects. There is a strong possibility of accelerated earnings over the FY25-26 period, underlining a positive trajectory for the company. Well, let's talk about the sector tailwinds. Couple of them: the increasing government emphasis on healthcare spending, coupled with the rising demand for quality health facilities in Tier 2, Tier 3 cities, presents a favorable environment for Krsnaa. The company, with its distinctive business model and a successful track record in tender execution, is well positioned to benefit from these trends put together. This alignment with evolving healthcare needs and government priorities signifies a positive outlook for Krsnaa's role in the healthcare sector. Let's talk about the reasonable valuation. Well, the stock is currently trading at an enterprise value to earning before interest, tax and depreciation and amortization, that is EV to EBITDA ratio of around 11 times its estimated EBITDA for the financial year 2025. The valuation is deemed reasonable by MC Pro team and especially for the long-term investor. With this, it's a wrap. Thank you so much for tuning in.